Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here this morning. Hang on one second while I get the screen share going on. Okay, Adam was going to join us here this morning. I'm just going to send him a quick message. All right. All right, so for those of you new to our trading room this morning, welcome. What you're looking at here is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. So we've got three different tools to take advantage of the market depending on whatever the market environment happens to be. Here across the top, we have the Hawk Microscalper. Through the middle, we have the Falcon Swing Trader, and across the bottom, we have the Eagle Trend Trader. As I said, each of these tools have been programmed specifically to pick up their market environment. Regardless of the tool, however, the signals are going to develop the same way. First off, we're going to get a warning dot along with an audio alert when the signal is starting to print. Then when all the signal parameters have been met, we're going to get a triangle and a hash mark. And that tells us it's time to make a decision about the trade. There's certain signals that we look for. We don't necessarily chase every single signal. For instance, here on the Hawk, we tend to avoid signals that produce off yellow bars. Even though this one did work out, we actually got the signal we would take just before. We wouldn't actually take that one off the yellow bar. But more on that as we go on. Before I forget, let me mention as well that your questions are most welcome. Just type them into the chat window. And if you would like to see a market, I would be happy to show you any market that I can get on my data assortment. Right now, the charts you're looking at here are the NASDAQ, and on my other monitor, I'm following the E-mini S&P and crude oil. All right, so we're also going to spend a little bit of time today talking about the Ultimate Support and Resistance Suite. This is our Falcon Swing Trader. And on the Falcon Swing Trader, I have loaded the Ultimate Support and Resistance Suite. Now, this is also what we call a system add-on. In other words, it's like a standalone indicator. The Support and Resistance Suite is an assortment of 21 support and resistance lines that are forecast for today's trading. The gold line here is the median line. That's the line that falls right in the middle of the assortment. And then just above and just below the blue lines, we have primary resistance and primary support. These three lines tend to set the tone for the day. Once the market is above or below here, it's going to have a tendency to be more bullish or bearish. And then we have our secondary support lines below. Those are the pink ones, and secondary resistance above. You can see yesterday, the market was pretty much sandwiched between the median line and the primary support. Didn't really get outside that range all day. Just kind of stuck there. And of course, it was a relatively sideways trading session. So this morning here, the Falcon, let's see, pre-market, it gave us a trend change signal right here. Fell off a little bit, came back, hit the primary support on the underside, came back and produced another signal, and now we've drifted down here to the secondary support. And it looks like we're going to try to produce another signal here in a second. So let me show you how this all works. I'll demonstrate a trade for you. A lot of people like to use the support and resistance lines as gauges to enter a trade and also a place to cover the position. So we know the primary resistance is up here, or I guess primary support. And we're producing a signal down here. We've got the warning dots. We don't have the signal just yet. As a matter of fact, this little green dot's kind of spoiled the signal. I'm going to wait for another sell signal to develop. But you can see it's bouncing, actually bouncing right on the number. All right, well, we'll let them reset themselves, and we'll come back to that in a second. In the meantime, I'll show you the Eagle Trend Trader. Now, the Eagle Trend Trader, as the name suggests, has been designed to pick up trend trades. This band through here, no, it's not an Ichimoku cloud. Yes, I know it looks like one, but it's not. This does give us our directional bias, though. So when the cloud is stacked this way with the soft edge below the hard edge, this is what we refer to as the hard edge, we're going to look for sell signals. And when the reverse is true, we're going to look for buy signals. As I mentioned, the signals all develop the same way. We're going to get warning dots along with an audio alert, and then a triangle and hash mark when the signal is complete. Now, a cool thing about the Eagle Trend Trader is the first in-sync signal of the day. So notice the market open here. Here's our first in-sync signal right there. Look at that. The market fell off already. We're only 5 minutes into the session, 5-6 minutes into the session, and we've already managed to find our high probability profit target. It's turning out to be a very, very reliable signal. Now, it has to be in sync, of course. If your chart is like this, where everything is all messed up all over the place, you wouldn't take a signal. But once that trend is in place, you get that signal out of the open, it captures a lot of that early momentum. And I think I've missed my opportunity here in the Falcon that I was waiting for. Darn it. So I was waiting for this signal to come back, that one right there. Could place our stops above the primary support, and there we go. The market comes down and kisses our high probability profit target. This tool I'm using here on the right-hand side, this is called the Trade Manager. The Trade Manager is a very sophisticated piece of software. In fact, when Adam first told me what his plans were to have this programmed, I didn't think he could have it done. Not for a home computer, not for a PC. This is the kind of stuff you usually only see on Wall Street. What the Trade Manager does is it has two components to it. It has a Risk Manager component, and it has what we call the Profit Manager component. I'll do the Profit Manager first. These blue dots that you see here, these are one of the 16 different stop strategies that the Trade Manager has available. These stop strategies are all customizable, so you can change the parameters if you want it more conservative or more aggressive. And what this does is once it's enabled and you're in a live trade, it will automatically manage your trade for you as long as you're in that position. And I'll show you how this works here this morning. Now, a lot of people ask, well, what stop strategy should I use? You've got 16 of them. Honestly, it's not that difficult. You're going to look at, or what I do is I look at whatever stop strategy seems to be fitting the market this day. So right now, you know, if I open up my chart and I put my ATR strategy on there, and let's say I want to go with a 3-period ATR, and I take a look at how my signals are printing. So let's say I go back here to the start of the trend and I say, okay, here's a trend change signal. I would have shorted here. The market gave me a little heat, but I wrote out the trend change signal and I got stopped out down here. Okay, it looks like it's following it reasonably well. And to start, really, that's all you need, is just to follow it reasonably well, because you can change the stop strategies as the trade goes on. So for instance, here in this signal, this is what we call a trend change signal. Let's say I took this trend change signal, and let's say I decided to place my stop above the median line. That's that gold line that you see right there. Now, currently I'm all in, all out on target, but let's say, here, I'll change it. I'm going to change my profit objective to only 50%. I'm going to take half off at target 1, and I'm going to leave the other half in as a runner. So you see how Trade Manager is going to format my trade. So I'm going to set up my stops like this. I'm going to be able to, given my account size, risking 2%, and I'm going to get to that in a moment, risking 2% of my capital, I can trade 2 contracts. So I'm going to take one at target, and then I'm going to leave the other one in as a runner. So the trade comes in. Trade Manager would now take my stop and roll it according to my stop strategy. But let's say I'm down here and I say, whoa, I got a fair amount of profit in play. What if I want to change stop strategies? So I can go to maybe parabolics. They're a little bit more aggressive, in which case I would get stopped out right there on that little reversal. All right, so you can change them as the session goes on. You're not locked into one particular stop strategy. All right, well, here we are. We're below the primary support now. Bounced off of the secondary support. 1, 2, 3. Once we're below the primary, we normally anticipate the market to move 2 zones. So I would think a feasible target would be down here around the 48.29 3/4 mark. If you're choosing not to use the high probability profit objective, that is. All right, the risk manager component here of the Trade Manager. The risk manager is very important. It's an ultra important concept. I cannot overstress, because this is what's going to keep you from blowing yourself up. This is what's going to keep you from decimating your account, and it's going to help you maximize your earnings. I'll let that sink in there for a moment, because most people do the exact opposite. Most people lose too much money and don't earn enough money. Well, the Trade Manager prevents that. The Trade Manager, you actually lose no more than you can afford, but you maximize your earnings. So here, let me show you this on the Hawk, because I'll have a little bit more flexibility on the Hawk. All right, so what most people do when they're trading is they keep their stops ultra tight, right? They throw their stops in there, and they say, you know, I've got less risk in play. But look at what the Trade Manager is doing here. It is setting my risk at a preset amount. This is based on this figure right here. This is 2% of my capital. So that means, here, let's roll back to this signal. That means whether I place my stops really tight like this, or whether I place my stops, say, even above that swing high, oops, sorry, went a little bit too far. So I'll place my stops above here. My risk amount does not change. It's always based on 2% of my trading capital. What has changed is the quantity that I'm trading. If I choose to set up a trade this way, I'm going to only trade one contract, and if I choose to set up a trade this way, I'm going to trade 6 contracts. But the risk amount itself does not change. There's a little bit of a rounding error here. So then the question becomes, well, how tight should I place my stop? Well, most people make the mistake of putting their stops overly tight. Right? They've heard, I got to cut my losses short and let my profits run. So I'm going to get out on the first hiccup. Well, what ends up happening is that you end up stopping yourself out of a perfectly good trade. Here, let's even do this one right here. This is what we call a macro pullback signal. This is a high probability signal. So if you set up your trade like most people, you're going to be like this. I'll go to manual mode. Manual mode defaults to this quantity up here. So currently I'm trading one contract. So I set up like this and I say, oh, okay, good. I'm only risking $60. The market engages the signal and then stops you out for $60. And then, of course, the inevitable happens. It goes on without you. If you're in risk percent mode and you place your stop there, your risk is going to be $360. Now, that's 2% of my capital. So if you're trading a $10,000 account, your risk is going to be capped at $200 if you're going to trade 2%. Generally speaking, anything less than 5% is considered prudent. You're not going to blow yourself up trading 5% or less of your capital. 2% is believed to be the ideal. But if I'm going to risk $360 on this trade, regardless of whether I place my stop down here or whether I place my stop up here, why would I not give myself a little bit more room on the trade? Right? Why would I risk getting stopped out on a little bit of a hiccup when I can place my stop further back and increase the probability of my success? Now, I know everybody's looking at this and saying, what, you're going to risk $240 to make $50? Sure, why not? Oh, well, that's totally against your risk-reward ratio. Well, what is a risk-reward ratio other than a made-up ratio based on something you don't know, namely the reward side of the equation? Have you ever considered that in a risk-reward ratio, the only part of the equation you have control over is the risk side? And yet, you're using the reward side to make a decision whether or not you're going to take the trade. Right? Most of you looking at this trade are going to say, oh, there's support down here and there's support down here. If I'm going to do a 3-to-1 reward to risk ratio, and by the way, you can set your profit targets as well, I'm going to have to, oh dear, I'm going to have to set my stops right here and my profits down here. Yeah, okay, I can take this trade. I can get at least 2-to-1 out of this trade. Well, what happens? The market brings you in, stops you out like 2 seconds later, and goes higher. You say, oh, well, I was wrong anyways. Good thing I only took the $25 hit. And then the market, of course, goes on without you. This, you're strangling your trades. You will never make money trading that way. Do you want to know how the pros do risk-reward ratios? They do it in hindsight. They don't do it now. They don't do it. They don't figure out their risk-reward ratio now and say, oh gosh, you know, there's support down here and there's support here. I can't afford to take this trade, right? Because I'm going to have to put my stop right up here and my support's down there. Oh dear, you know, that's just a one-to-one at best. And then they take it anyways, get stopped out, and the market goes down. No, that's not how the pros do it. You want to know how the pros do it? The pros do it in hindsight. The pros set up their trade like this. Actually, here we're going to... The pros set up their trade like this, where they set up their trade, they give their trade a chance, the market brings them in, and then the market starts to go in their favor. Now, the pro trader says, this is my risk. Now, it's a defined quantity. So now the pro says, all right, that's my risk. There's my 1-to-1. There's my 2-to-1, approximately. The screen is stopping me here. Now the pro says, I'm going to throw my profit-taking order right down here. And the market comes down and hits the profit order, and there's your 2-to-1. Oh, looks like it's going to try to do a 3-to-1. And that's how the pros do it. They do it in... Oh, actually, you know what they probably did? They probably entered a little later than I did. I entered earlier. Yeah. So the pros would be looking at it like this. Excuse me. They'd be looking at it like this, and they'd say, okay, there's my 1-to-1. And there's my 2-to-1. There we go. I got a little ahead of myself. All right. Well, and here's the guys getting out early. Nobody wants to be the last one holding the ticket before it finds the profit objective. But that's how the pros do it. They don't do it beforehand, because how many times, quite honestly, how many times have you looked at a trade that looked like a perfectly good signal, but you couldn't manufacture... Oops, sorry. Let's go back to the one we were looking at. This is a macro pullback signal. This is one of our high probability signals. How many times have you looked at a signal like this and talked yourself out of it because you could not see the market going any higher or lower? In this case, lower. Well, if you're like me, probably more times than you care to admit. And yet, what happens? The market goes on without you. No, forget about trading that way. Much better to cap your risk. Stop that. Much better to cap your risk at a percentage. So I know whether I place my stop here, or whether I place my stop here, or whether I place my stop here. My risk amount will not change. And the trade manager, if I go too far, oh, okay, I didn't go far enough. But if I go too far, the trade manager will tell me I can't afford the trade. Let's go way up here. See, trade manager says, no, sorry, Eric, for your account, you can't afford that. So it's always protecting you. It's always maximizing your profitability on a trade by making sure you are trading as many contracts as you can afford, but you are never risking more than you can afford. So let's say we get brought in here. Well, we do. The signal's engaged. The market moves against us, even if it had made a beeline straight to our stop loss, and we get stopped out. Yes, it's unpleasant, but this is still not an amount I can. This is still an amount I can afford. This is such an important concept, and something that most people never wrap their brains around, and then they wonder why they can't make any money trading. Okay, I'll put the soapbox away for now. We're kind of moving here a little bit sideways. I will take a trade here. If we don't get another decent signal in a moment, I'll take a trade just to show you how the trade manager automatically rolls your stops for you. And with our profit objectives, all these yellow bars here, when you see a bunch of yellow bars printing on the hawk, that's usually a sign that the market's getting a little congested, a little bit sideways. We are printing a first micro macro cross. Why don't I try this one? So we're printing the warning dot. The signal is not complete just yet. Oh, now we're into yellow bars, so I can scrub that order. The first micro macro cross signal is the first signal that prints after the micro line crosses the macro line. That's the thin line over the thick line. And everything is in sync. So we've got red bars, red trend line, red filter. So for instance, this signal back here was the first micro macro cross signal. Very high probability signal. All right, looks like they're going to try to make a little push here to the upside. We might get a first micro macro cross higher. Let's see what's going on here on the Falcon. Working a possible trend change signal on the Falcon. So our trend line has changed color. We've got this up portion. Going to look for a little hiccup here, perhaps a little bounce off of the secondary support line, which should now act as resistance. And let's see if we don't get a little bit of a bounce. Come on. If nothing else, we'll try to get in here with the hawk. And what I'll do is I'll try to put a runner in. Okay, now the eagle is almost back to the hard edge. Whenever the market encounters the hard edge on the eagle, we always anticipate some sort of reaction. So I'm not going to get too cocky here on the buy side because it looks as though the trend itself is still down. But it should give me an opportunity to demo a trade here for you. All right, so we're going to wait here on the hawk. We're right up against our secondary support line. It's running right through here. I know you don't see it. It's on the, I have it here on the Falcon. So secondary support 48.45 half. That's right where the market's reacting now. But I'm going to look at the hawk because I think the hawk is going to produce a signal first. Now this is going to be a counter trend trade. We're in demo mode, so I'm going to show you how this works. But all right, here's the signal. All right, folks, where do you want me to put our stop? The best place to put the stop is right down here, right? Now I know this is making some of you squirm in your seat, but really this is going to be the best chance that this trade has to reach its profit target. Okay, moving a little lower, so we'll adjust our parameters. No, moving lower. Set another order. And now we're back into yellow bars. So the yellow bars are spoiling the signal. Oh, that's a red bar buy. So the red bar buy is kind of the last ditch effort on the part of the buyers to recover this trend. So we've got a red bar with a buy signal. All right, now notice how the trade manager, I hit the auto break even target. It automatically took my stop from down here, brought it up to the break even. It's actually break even plus one. Hopefully we'll see the market rally above this high, and what I'll do is I'll engage some of our stops. Now, these orange hash marks that you see here, this is the preview. I can preview a stop. So currently, if I'm going to run the ATR strategy, this is where my stop is going to be at. Let's see if they'll allow me to ride out this swing. This is now a first micro-macro cross signal, the warning dot, our high probability signal, and it's going to produce right here at that secondary support line. Remember 48.45 half? That's right where that signal is going to print. Come on, get up there. I've already engaged the auto break even and our first profit target. But really the best place for this stop is probably still down here. What, you say? Yes, it's true. So right now, remember, your risk is always capped at an amount you can afford. So I'm looking to see the buyers come back one more time, after which time I'll be able to roll my stops up. Come on, give me another bar. You can also shoot trend lines if trend lines are more helpful to you. There we go. All right. So at this point, I would probably, well, at this point, I would probably consider bringing my stop to break even. But at the very least, you could bring your stop below that swing right there. This is going to give you the most staying power because this is where the buyers started to rally again. Right? If the market fails at this point, then the buyers are no longer in control. Right now, the buyers are in control. Come on, get up there. And once they break through here, well, then we can become much more aggressive with our stops. And you can always use, let your pocketbook be your guide. There's 200 and change sitting there ready to be taken. A lot of people are only looking to make, I get a lot of emails from people saying, well, I'm only looking to make, $100 or $200 a day in trading. Well, right there, you got it. There's 150 in open profit. We've already banked $50 on one of our contracts. Come on. Don't make me get the magic mouse out. All right, here we go. We're going to push the market higher. I don't like manipulating the markets this way, but come on, get up there. Get going. So if we see the market break above the high, and we should see a little bit of a rally as a result, I'll probably go to a more aggressive stop strategy, maybe something like the bar high-low, which is a very aggressive stop, or perhaps the parabolics. Let's see about parabolics. Yeah, I think I'll use parabolics. In fact, look at those already. They're not enabled yet. I'm going to enable them in a minute. And then watch this trailing stop. Watch how the trade manager will pick it up and start to roll it according to the stop strategy. Oh my gosh, they're really, what's holding them here? Yeah, we're still fighting with this 48-45 area. There we go. Now we're getting a little traction. Here, I'll give you another little push. Get up So I'm going to enable my stops now. Now watch how the trade manager takes my stops and will automatically roll my stops up according to the parabolic strategy. What this does for you is it essentially makes this trade hands off, right? I don't need to watch this trade anymore. I can put that on the shelf. I can look for another signal to print, maybe in the Falcon, or I can watch Crude Oil now or the E-mini. I don't need to babysit this trade anymore. This trade is now totally on autopilot. If I'm afraid I'm going to mess it up, then I can, Adam likes to tease me because one time when we were in a trading room years ago, I went and I walked the dog. He said, "How can you walk the dog when you've got an active trade?" Well, I said, I placed my stop loss, I placed my profit order. The trade was at break even at the time. I said, there's nothing left for me to do. Yeah, Mark says, I like the magic mouse. Yes, it's still in beta. Once we have it perfected, we'll make it available to the public. Okay, so you can see the parabolic strategy a little bit more aggressive than one of the other strategies we were looking at, but this is a counter trend move, so I don't mind getting the stops in tight. Let's see, how are we doing? Open profit. Oh, not bad. Not bad for a scalp trade. But you see here too, this is when I took this position off of this red bar buy signal, this guy right down here, which is one of our high probability signals for the hawk. I maximized my earning potential. See, here's a problem too. If you're always just a onesie twosie trader, or let's just say a onesie trader, because you're looking to keep your risk small, okay, you trade one contract, you put your stop down here, right? Because that's how most of you like to do it. You enter here, you put your stop down here. And to be fair, DTS is very good at picking up immediate market momentum. There's no question about that. But you place your stop here and you're up and you say, oh, goody, I hit a big winner. I'm up 50. I'm up about $100. But you didn't maximize your earning potential. You're up $100. I'm going to be up $300. That's the difference. So when you lose, okay, you might lose a little bit less, but I still don't lose more than I can afford. But when we win, you are definitely earning less than I am. And isn't that the whole objective? Aren't we doing this to make money? And of course, that's a rhetorical question. I'll share a quick story with you while we're waiting for this. Have we hit the primary? No, not yet. I suspect we're going to see the market try to retreat all the way up here to the primary support. Could take a little bit of time, however, but that's where I think we're going. I'm going to share a quick little story with you of one of our owners. His name's Derek. I don't know if Derek's in the room with us this morning. Let me see before I start bragging about him. No, he's not here this morning. Good, so we won't get a swelled head when I say these nice things about him. Okay, so you see the market backed up, hit our parabolic strategy, automatically stopped us out, and hooray for us. We, had a nice little winning trade off a high probability signal, very stress-free. We didn't have to fret about how we were going to manage this position. We didn't have to worry about how much risk exposure we had because our risk was capped. And if the risk amount seems too large given the trade, then dial it back. Trade 1% of your capital. Trade 0.5% of your capital, whatever makes you comfortable. but adjust your risk this way. Don't adjust your risk by jamming your stops in so tight you get stopped out before the market even has a chance to get to your profit target. All right, I was telling you about Derek. Derek was he was trading for a while on his own before he got the DTS system, and he was essentially a onesie-twosie trader. And he told me one day, you know, I made a little, I lost a little, but I never really got any traction until he got the DTS system and the trade manager. Now all of a sudden Derek said, you know, I'm controlling my risk and I'm maximizing my earnings. For the first time, he was not letting, you know, that odd losing trade wipe out all his earnings and set him back to where he was, or a string of losing trades set him back to where he was. It's not to say the DTS system won't ever give you a false signal. It will. It's the nature of the game. You're going to end up with a poor signal from time to time, but these are all high probability signals. These are signals you can trust, but even if the signal fails, again, I haven't risked more than I can afford to lose. So Derek started trading this way, and he started capitalizing and maximizing his earnings. Within a year, he quit his job. Within 2 years, he was trading other people's money. That's how powerful correctly capitalizing your positions are. That's how much of a difference it will make to your trading. Don't just take my word for it. You can take Derek's word for it, or anybody who's been down this path. Traders are always looking for that elusive signal, that elusive setting that's going to give them that, put them over the hump where they can finally get these winning trades. No, that's only part of the equation. Yes, you need a winning signal. I'm just checking the Falcon here. We're still not producing a signal. We're getting messed up by the trend lines. We're getting messed up by the filter. I'll let you know when we get one. But the signal is only part of it. Knowing how you're going to manage your trade once you're in it, and controlling your risk are the other two legs of that three-legged stool, right? Without all three legs, your stool is going to fall over. You can have one leg, and maybe you can balance yourself well enough that you don't fall over right away. You can have two legs, you may be able to stand up a little bit longer, but you need all three legs to make this work. And yet most people are only interested in the one. They're only interested in, show me that signal. What's the best setting for stochastics? How do I use MACD? I get it all the time from people, and I try to tell them, listen folks, sure, MACD is great, stochastics are great, but there's more to trading than just that. Look, here we're getting a hard edge bounce. We're producing a signal. We're going to get a second push on this signal. Right now, it doesn't look like the market's going to go higher or lower, class. Let's get some input here. Is the market going to go up or is it going to go down? See, I'm getting even a response. Some are saying up, some are saying down. It's because we don't know. We don't know if it's going to go up or down, but we're producing a signal. So why don't we take a look at taking the signal? We'll take the signal. I'm not going to risk it here. That's too tight. Can I go 2 swings back? No. See, Trade Manager says, no, Eric, if you're going to do that, you can't afford it. Okay, so at this point, I either need to stand aside, wait for a better signal or a signal I can afford, or set up the trade and realize that okay, this market may move against me, in which case I'm going to get stopped out. And I'm going to, be comfortable with that amount. If I'm not comfortable with that amount, then I dial down the risk. I don't jam my stop in extra tight. So the signal you're looking at here on the eagle, as I mentioned, whenever we encounter the hard edge, we anticipate some sort of signal. This is called the green bar sell. It's green bars with a sell signal. Now, this squiggly red and blue line that you see on here, this is our ATR line. We use this as a filter. So when the signal itself printed, it was against the ATR. So what we do is we allow the next bar to trade through. That flips the ATR over, and this essentially now becomes our signal bar. I'm also incorporating a strategy we call the second push entry. All the second push entry means is we allow the signal to engage, and then we watch to see where the market flinches. So it's trading higher on this bar. That tells me that that's the bar I want to enter below. If the market fails below this bar, then we should have some renewed downward momentum. But it doesn't look like it's coming just yet. All right, well, we're going to scrub that order. We're getting a green warning dot. If it comes back here, we're going to produce another sell signal, and then we can look at getting on board there. So it looks like everything happened early on this morning. We got a big push lower, and now it almost appears as though they're content to go sideways. No real follow through higher or lower. Again, we're just skewered by this 48-45 area. Remember this number. This is going to be an influential number tomorrow. We're spending far too much time around this support line. Once we get above it, I suspect we're going to see the market get above, come down, retest it one more time, and give us a buy signal. That'll be a buy signal we can get on board with. What I'm waiting for here on the Falcon, you might be looking at this and saying, well, why didn't he take that buy signal? This signal here, even though it produced a, is that the right one? Is that what I'm looking at? Yes. Even though it produced a buy signal, it was out of sync. Our trend line was red, and our filter is red. I know it's gone up, but it wasn't a complete signal. Not as far as the Falcon is concerned, anyway. Denton, you're absolutely correct. Denton says they're probably going sideways for the upcoming FOMC minutes being released later today. You are most certainly correct. The market does have a tendency to do that. And here the hawk is a good indication. Because the hawk is a scalping tool, you're going to get these kinds of things cropping up earlier than you will in your swing and trend trading tools. What I'm looking at here are all these yellow bar clusters, and you see how they're printing at more or less the same price level. That's suggestive of a sideways market. You can see we got another red bar buy down here. This is the same signal that we were just looking at on the Falcon, but even though the swing trading parameters weren't right, there was enough in here for a scalp. So this is a red bar with a buy signal. That's a red bar buy on the hawk. So even though the swing trader didn't catch it, the scalping tool definitely did. All right, well, let's see if we can't get another opportunity here to try to do something. Yeah, so Jim's asking, so how are you working the support and resistance levels into your trading? Well, unfortunately, the market's kind of going sideways now, so it's not the best example currently, but let's take a look here at what has happened in the overnight. And one of the easiest ways to use the support and resistance levels, I know Omar, who likes to trade the Forex markets with the DTS system, does this. And what he'll do is he'll manually choose his targets. So I'm going to go to click target option. And what Omar will do is, if he's producing a signal this way, he'll use the support and resistance lines to cover his trade and as a profit target. So that's the easiest way to use the support and resistance levels. Is he knows if the market trades above the median line, it's time to get out. And if it trades lower, he's going to look for some sort of reaction around the primary support, so he may as well take profit at that point also. A lot of people like to use it as a confirmation as well. So what you're looking at is you're looking at a signal that is printed. This is what we call a trend line touch signal. And this signal has printed on the underside of the primary support. So you would say that the support is broken. And so you would enter here. And again, you could cover up here and you could look what we normally do when we believe the primary support line to be broken, or the primary resistance for that matter. We anticipate the market to move two zones. So this would be zone 1, this would be zone 2. That's what we would be looking at as a profit objective. And like I said, if it broke the primary up here, we would be looking for the market to move two zones as well. So that would be our trade, and then the market comes down, bounces off of the primary support line again, in which case you could now bring your stop from here to the other side of the support line. If you were trading more than one contract, you could look to take partial profits at the first support level with your ultimate profit target down there at the second one. So there we go, we've engaged the first level, and now we've broken here again. You see how we're printing a signal, we're below, so you could roll your stops now below here. And we're struggling, and oh, we're trying hard. Honestly, off of this second reaction here, I would probably start to roll my stops maybe a little bit more aggressively, because what's happened is you see 1, 2, 3, 4 hits off of this support level. It's looking like we're not going to make it to the secondary level. So if you're not going to roll your stop more aggressively like that, at the very least, you probably want to bring it here, or, like I say, just above the secondary support line. And there you go, you get stopped out. That's how I would normally do things. A lot of times I will use the support and resistance lines as a profit objective, especially when I have a runner in play. And I'm looking for the market to give me a little bit more run out on a trade. Okay, so here we're still hovering around this 48-45 half line. We're not through it just yet. Yes, we've traded through it, but we haven't really printed a signal on the other side. So I can't say that it's broken and that the market should go higher from there. By the way, because the Ultimate Support and Resistance Suite is a system add-on, you can use it on any chart as well. You can use it on can use it on a time-based chart or a tick chart. It comes with the DTS system, though. Moses is asking, do we need to pay for the S&R system? It is a separate add-on, but it is part of the DTS package now. All right, we're really at a crossroads. Look at all these yellow bars that are showing up. More yellow bars. This is not typical. And we're now here into the eagle, right? We're firmly into the hard edge. All right, Ken's reminding me oil inventory in about 4 minutes time. So here, let's take a look at the crude oil market. So what I'm going to do here on crude oil is I'm going to use the OCO function. And what we're going to do is we're going to look to, you can see how the market's pretty much skewered by the median line. We're going to look to buy above the primary resistance, and we'll take profit 2 zones out, and we'll do the same thing here on the short side. We'll look to sell below the primary support, and we'll take profit 2 zones out. 1, 2, 1, 2. There we go. There's our trade. Now, when you use the OCO function, you need to remember that these trades are live the moment you put them on your chart. So what I tend to do is I tend to place them away from where I want them to be, and then I tend to roll them in. All right, so we'll just hang with this for a couple of minutes, and we'll wait for the crude inventory report. Oh, I guess I better get a stop and play. Wouldn't that be smart? Let's go with something. I'm going to go with the... Yeah, sure, let's go with the parabolics. I don't want to give this market too much wiggle room on me, so I've got my stops enabled. I got, yeah, parabolics on. All right, we're all set. Okay, all right, here we go. The crude inventory report should be coming out any moment now. We're going to see these bars get real crazy here in a sec. Now with the OCO function, what happens is if I, all right, let's see if I did this right. I might have done this wrong. I should have set another OCO for my sell orders. You see, your OCO functions are all linked together, which means if I cancel the one, the others will automatically cancel. Let's see if I did this right. Normally I set 2 separate orders, a buy order and a sell order, and then I set my stops. we're about to get brought in. There we go. I did it right and I did it wrong at the same time. I forgot to toggle that off. Oh, darn. I think I just got tagged on the little reversal there in the parabolic. All right, let's try this again. So I'm going to buy above the primary, and I'm going to take profit here. And now I toggle my OCO. There we go. Now I got it. And I'm going to sell below the primary, and I'm going to buy it back right there. There we go. Okay, so notice now my OCO numbers are different. OCO2, OCO3. These are separate OCO orders. I forgot to toggle in between. Now, if I wanted to get more aggressive, I could use the median line. Why don't we do that? I'll use the median line, and I'll go 2 zones below the median line. 1, 2. That'll be my profit target. So I'm using the primary resistance and the median line for my order entry. In fact, I'll give it just a little bit more here on the median line. When you're using the support and resistance lines, it's important to remember that these numbers are predicted for today. So if the market fudges it by a tick or two, that doesn't invalidate the line. And we're trying to predict what the support and resistance numbers will be for today. And you see, sometimes it hits it right bang on the number. But sometimes it'll fudge it by a tick or two. Crude oil a little reluctant to get above this 48.25 area. Well, that has got to be the most subdued crude inventory I have ever seen. Are we sure today is inventory? I know it's normally Wednesdays, but it is a holiday this week. No, it came out, crude inventory. Wow. What a nothing burger that was. All right, well, we're about to engage. There we go. Okay, so now we're engaged, and what I'm going to do is I'm going to cancel the other order. And what did I do? All right, and I've got my profit target back. So I'm going to roll my break-even trigger actually a little bit higher. I'm going to put it at this next resistance line. And all we're doing here is just a basic channel type trade. We identified an opportunity, we bracketed, we used the support and resistance lines to determine where the market was likely to react. Parabolics are getting a little bit aggressive here. Maybe I'll hold it back just a little bit. So you see, you can adjust your swing strategy or adjust your stop strategies as you go. Just because you start with a particular strategy doesn't mean that you're locked into it. So right now I've gone to the swing strategy. We're covering the position at the median line. And if crude oil ever gets it in gear, we should see it trade back here to 49. It's a bit of a move, and they're certainly struggling with it, but we'll see. All right, well, let's put this on the shelf for now. We'll come back to that. Let's see what's going on in the NQ. Oh, we've come back with a sell signal here on the Falcon. All right, so notice how the market is stuck here around this secondary support line at 48.45 half. Like I said, make a note of that. This is going to be an important number tomorrow. It's an important number today. It will be an important number tomorrow. So the market keeps trying to print a signal on the buy side, but it's not a signal. Remember, the signal has to be in sync. So in other words, we need to have green bars, green signal, green trend line, green filter. This one almost completed. If this one had printed, it would have shown that there was enough upside momentum to actually break the support line, but it didn't happen. In fact, the market came back and produced a sell signal where everything is in sync to the short side. We're below the support area. Here, excuse me, I'm going to go with my preset targets. Pardon me, excuse me, just a moment. We're below the support line. We produced a signal, and we're almost to our profit objective. At this point, we probably would have already engaged the auto break-even trigger, so the trade is already sitting at break-even. Or if you like, you could bring it in just above the 48.45 half support area, because we know that's definitely an area of consideration. Come on, get down there. There we go. And voila, we've hit our profit objective. So you see, part of the deal with trading is finding the quality signal. Most people come into trading with a production line mentality. They think, oh, I need to trade, 20 times a day. I had one fellow come to me and said, Eric, I want you to teach me to scalp. I want you to show me how to take 50 trades a day. And I said to him, you'll never be a successful trader trading 50 times a day or 100 times a day, and he never came back. I can show you how to do it, but that's not the key to successful trading. The key to successful trading is finding that signal that is going to go somewhere, that's going to build on some momentum. In this case, it's a trend change signal. It's closed below support. We go in, we capitalize correctly, so we maximize our earnings. The market comes down. Look, you only need to do this 2, 3, maybe 4 times a day at the most. And yet most people are trying to get in and out, a dozen times a day, and they wonder why they can't make any money. Because every time you try another trade, you open yourself up to the possibility that that trade will be a loser. And even though we're containing our risk, losses are still unpleasant. It's not what we're here for. We're here for to try to make some money, not lose money. That's obvious. But by finding those signals, those high quality signals that you can trust, using your high probability profit targets and correctly capitalizing your position, you've got yourself a winning formula. And that's how you make money trading. It's not chasing the signal all over the map. All right, let's see. I'm just going to check here, make sure I haven't missed anybody's questions. Nope. Let's take a look here at the Eagle for a second. There's that green bar sell again. So this was the signal we were looking at earlier, and we were looking at taking a second push on the signal. The market retreated back into the hard edge, came out with a green bar sell. There it is right there. This time it is in sync with the ATR. Now, you could put your stops right here. However, again, that you're kind of strangling the position a little bit. If you're going to do that, if you're going to run your stops close like that, then you should consider dialing down your risk amount. Because if you're going to take an early stop out, better you don't take a stop out for the whole amount. Right? Better to take a smaller hit. So the market brings you in, and currently you're kind of working that trade. Not really an opportunity to do much with your stops just yet. If it bounces off these lows again, however, you may need to get a little bit more aggressive and try to minimize your exposure again. All right, well, let's leave that alone. Markets have gotten very quiet. I forgot to check when that FOMC minutes are due. Oh yes, not till 2 p.m. Pacific. Or pardon me, 2 p.m. 2 p.m. Eastern. Sorry, I'm trying to do too many things at once here. Yes, 2 p.m. Eastern. All right, well, the markets are dead sideways. I wish I could make them do something for you, but I can't. I'm just watching crude oil, which is also drifting sideways. The E-mini, not much going on in the E-mini. Here's just a different look. So here's the E-mini on the Hawk scalper. We've got a macro pullback signal a little bit after the open, but that's it so far for the E-mini. We're working a possible first micro-macro cross higher. So we've got the warning dot. I know the hash mark's going to print right there. Where do you want me to put the stop? Should I put the stop here? We'll call that A. Put the stop below this swing. We'll call that B, or down here. Anybody want to play? Here, down here, up here. Oh, I can't persuade anybody, eh? Michael says the closest swing. All right, Mike, let's go with that. I would put it down here. But you know what? Trading is very much a personal thing as well. Oh, yeah, I see Dan says go for the bottom. I'm a big believer in probabilities. I think it's more important to give yourself a probable outcome than actually worry about the dollar amount. Yeah, Michael says it depends on your account size. Yes, that's what it always boils down to. But so many times traders don't give their trade a chance. They don't even give it an opportunity to get profitable. Here's the support and resistance lines on the E-mini, and you can see a slightly different look. Here's the secondary support line. This is equivalent to the line that we were fighting on the NASDAQ, but here you see the E-mini actually printed a buy signal. So you could currently be long the E-mini S&P, and we're taking a little bit of a bounce now off of the support area, which is good. Once that bounce confirms, that would be a good spot to roll your stop. You see how we haven't printed a signal above the primary support yet? That means that primary support essentially is still intact, although I do suspect it's going to yield. Well, it still hasn't engaged the signal. Had some good opportunities here this morning, but pretty slow on the follow-through. Higher and lower. It seems like the market's drying up. Now with the E-mini, I have doubled my profit objective. Normally, I would only be looking for a 4-tick scalp. In fact, why don't we do that? I've got some time. There we go. We may find ourselves in a little bit of a sideways range, actually. Come on. All right, here we go. You leave me no choice. I have to give you a nudge with the mouse. There we go. Come on, get up there. Come on, go in. Nope, I just don't feel like it. All right, we'll put that away for now. Come back to it. Oh, I know what I can show you. Why don't we take a look? I think I get the euro. No, I don't. I thought I got the pound US pair. Maybe it's the euro yen pair I get. No, I don't get that one either. All right, let's try the 6E. That one I know I do get. Okay, so here's the euro. A little bit of a slide. Look at this. How many zones are we down? 1, 2, 3, 4. Working on the 5th zone. That is a huge sell-off. Let's take a look at what's been going on. This is just the North American session. Let's see the overnight. So remember how I told you these three lines here, the two blue lines, the primary resistance, the primary support, and the median line. These kind of set the tone for the day. And you can see that the market fell here below the primary support, came back, hit it from the underside. Oh, I thought that break was going to hold. It didn't hold. Spent a little time sandwiched between here. There we go. Now it failed. So now once it's below the primary support, you can pretty much anticipate that the market's going to stay bearish. And that's exactly what it did. Wow, this is crazy. It blew right through that support level. It hesitated. It tried to recover. You can tell by the wick on these bars. But look at that. So then fell to the next support level and the next support level. Each time you get a little bit of a hesitation. Down to the next support level. Tried to break higher, but look at that. The support level held it down again. Another break below. Well, where do you think it's going to? Anybody want to venture a guess? I'll give you a hint. It's probably down here. If it keeps sliding today, this will be the next stop. It just took another bounce off of the underside, printed another sell signal. My goodness, as unlikely as this seems, it looks as though the euro is going to slip down here. Wow, that's crazy. Now, it is near the end of the European session as well, so if you're looking to load up on the euro dollar, this might not be the best time to do it. Let's take a look at the pound. For those of you who would like to trade the Forex markets, I'm trying to show you a couple currencies. Okay, just waiting for the British pound to load. Wow, look at this. The pound has just been so sideways ever since that whole Brexit thing. It's tried to recover, it's tried to fall off, just nada. And here on the hawk, again, you can tell all these yellow bar clusters, once you see those coming up and they're printing more or less the same price level, that just tells you that the market is sideways. It doesn't mean there aren't some scalp opportunities. Here's a first micro macro cross lower. That fell off nicely. Here's a first micro macro cross lower that I believe found its profit objective. Yes, it did. And then started to drift sideways. Let's go now to the Falcon Swing Trader. Wow. Ugly. So market's pretty much riding on this 124 area, 123.99 to be precise. That's what the primary support worked out to be. But it's stuck. It tried to get above the median line. No luck. Came back down, bounced underneath, produced a sell signal. Raced down to the primary support. Tried to get below there, no luck. Yeah, now we've printed a buy signal. So it's probably going to go back here to the median line. Whether it can get through and get back to the primary resistance, that would be interesting. Looks like that's where it flinched this morning. But here too, the London session is closing shortly, so you don't want to get too excited. about getting long on the pound just yet. Maybe check back with it later this evening. And here is the British pound on the Eagle. Recognize this one? That green bar sell off the hard edge. Boom. Anytime you get one of those green bar sell signals off of that hard edge, that is a high probability signal. Here's the reverse of the green bar sell. It's the red bar buy, which you will see in an uptrend. Didn't have as much follow through as I would have liked, but it did at least get high enough to challenge the highs and at the very least maybe adjust your stops a little bit. Came back with a rule of three sell signal. This is our counter trend signal in the Eagle. It occurs when the market starts to print sell signals against a bullish band. So you're printing counter trend signals. The band is bullish, you're printing sell signals. You need three of them and a retest of the high. So we have all three situations here. We've got the retest of the high. We've got three sell signals. That is a high probability sell signal, and then the market falls off nicely. Michael's asking, the 6E, is that the same as the Euro-US dollar pair? Yes, sir, it is. The 6E is just the futures version. Same thing here with the 6B. This is the same as the pound US dollar pair. The biggest differences between the Forex and the futures market is that the futures contract will have a preset size to it. In the Forex market, you could, as for those of you who trade the Forex know, you can trade for, you can trade for $1 if you want. You can set up a trade. This isn't a signal, but I'm just going to do this for example's sake. You can set up a trade like this to here, and have the whole thing cost you $1. Now, mind you, you may only make $2 on the profit side, but that is possible. The Forex market, that's a bonus of the Forex market, is that you can custom tailor your risk exposure to as little or as much money as you have. The futures, this amount is set. Right? It's going to trade a single contract, it's going to cost $300. There's no other way around it. The downside with the Forex market, and what I consider to be a really difficult obstacle in the Forex market, is the commission spread. The spreads are too easily manipulated. What the spread means, they always say, oh, I can trade Forex for free. There's no brokerage commission. Yeah, there is. It's figured into the spread. So what it means is I may have an entry at 124.12, but given the spread, the broker is going to take the first $40 or $50 of that trade and put it in their own pocket. So I may intend to enter at 124.12. I may not get entry until 124.17. So those first few dollars always end up going to the broker. So the broker always gets paid regardless, but at least in futures, it's out there in front of you. Nobody's trying to ride your coattails. All right, so we finally got that first micro-macro cross signal to fill. Bring the break even down. There we go. This now the E-mini S&P. racing higher. Can hardly contain it. Look at it go. Or not. Come on, get up there. Let's give you a little push. There's no point in turning the auto stops on yet because it's not going anywhere. Here, let's take a look at maybe the chandelier line up with where we are. There we go. Chandelier strategy right where we're at. Let's enable that. There we go. So now my stops will be managed according to the chandelier strategy. The stops are down here. And as this moves higher, the chandelier strategy will pick up my stops and roll them with the market. Come on, let's go. We're going to hit the break-even trigger here in a second. Come on, get up there. Get up there. We're going to close the trading room here in a moment, folks. So if you have any questions, please type away. I guess I should have traded a little bit more actively out of the open. I didn't realize the market was going to fall flat on its face right out of the gate. Come on, let's go. All right, no questions. All right, we'll close up the trading room. Tomorrow is Thanksgiving, of course, so the markets will be closed. So DTS owners, I will see you in the trading room Friday, although I suspect Friday is going to be pretty dismal because everybody's going to be at the mall, but we'll see how it goes. We'll talk to you then. Everybody have a wonderful holiday weekend, and we'll see you again next week. Bye for now.